This video was brought to you in part by SD Bullion.
While some online bullion dealers continue to charge $4 over spot for U.S. Mint Silver Eagles, SD Bullion is selling 2016 Silver Eagles for just $2.29 over spot for any quantity. Again, that's just $2.29 over spot for any quantity. If you haven't joined over 25,000 new customers by making the switch to SD Bullion, what are you waiting for? You could save hundreds or even thousands of dollars on your next order. SD Bullion, the lowest prices, period.
Hey everyone, this is Elijah Johnson with FinanceAndLiberty.com, and back with us today is Dr. Ron Paul, former congressman and former Republican presidential candidate, and now the host of the Ron Paul Liberty Report. Dr. Paul, thank you so much for joining us today.
Good, Elijah. Nice to be with you again.
All right. You recently wrote an article about the path to Fed exit. Now, I'd like to read a quote from one of your articles. You said that the Fed's action affects the entire economy and impacts the lives of all Americans, as well as people around the world. I guess, did you want to expand on this and the importance of basically ending the Fed?
Yes, because it's a subject I've been dealing with for a long time. Matter of fact, the subject of money and the Federal Reserve motivated me to run for Congress in the 1970s because I came across Austrian economics in the 60s, and they made some predictions that the pseudo-gold standard set up at Bretton Woods in 1944 would not last. It did not last, and it collapsed in 1971, and that got me very much involved. It is a big deal. It's a big deal because the dollar is a total fiat currency. We get to print the money, and that's a big deal in itself, but it's also the reserve currency of the world. So when we took gold, the world took gold out of the system, they had to have something to link to, and so they linked to the dollar for a while. It was linked to a pseudo-gold standard, partially backed. For a while, we could, recuperate gold by turning in dollars, and that was stopped in the 1930s. But in 1971, not even foreigners could do it. So that unleashed this total power of our Federal Reserve to print money for anything and everything that it wanted. And we gained great advantages for this because it was like we had a gold machine. And as long as the people trusted the paper as if it were gold, we had this privilege that we could spend overseas. It's also one of the reasons why our jobs go overseas, too, because it's cheaper for us just to buy stuff than to produce things. So it creates tremendous imbalances. This system of money creates successive debt, and because interest rates have to be low in order to keep it going, it causes a lot of bad investment, malinvestment. People spend money the wrong way. Consumers get the wrong message. Investors get the wrong message, and that makes a very precarious economy. But it's just not domestically. It's worldwide because everybody depends on the dollar. Traditionally, up until this point, because we've had fiat currency, total fiat currency since 1971, the Fed's been able to tinker around, manipulate interest rates, cut back printing money and all. But eventually the bubble gets so big that they can't tinker anymore. If they do, there's liable to be a much bigger calamity. And that's why interest rates, they talk about it, but they essentially never raise interest rates. The world is involved in zero interest rates. Some countries are charging you to put money in the bank. So it's a totally non-viable system. It's never been used before, and it challenges all the common sense laws of economics that we're working with. So I, for one, and many others, especially those who have studied Austrian economics, expect this not to last, and there will have to be an eventual correction of this. That's what the market demands. If there's too much debt, they want to liquidate debt and start all over again. But so far, the powers in money have been able to keep things afloat, and they bail out everybody. And as long as there's a trust, which is subjective, in the currency, the bubble keeps getting bigger. So I think we live in a very, very dangerous time. And unfortunately, what the Fed does is they finance a lot of mischief. They finance the welfare state, the warfare state. So not only is it a problem with the monetary problem and the business cycle, it also finances some real great evils that we have to put up with.
Now, in your article, you talk about different steps to ending the Fed. And the first step you talk about is auditing the Fed. You said while an audit would not stop the Fed, in doing its actions, it would make transparent the Fed's operations. And once the public was aware of what the Fed was actually doing, then there would be more public support for ending the Fed. Did you want to expand on this?
Yes, and I think this is the one area where we've made some progress in the last decade, especially because before that, nobody really talked about the Fed. Nobody blamed the Fed. The Fed generally got away with what they were doing. If you had good times, the Fed got the credit. If there was a slump, it was due to free markets and gold standards and all these things, and the Fed would come to its rescue by printing more money. But not so anymore, especially since the last crisis in 08 and 09, because they actually churned about $17 trillion in propping up and bailing out other central banks, other governments, big corporations, all the banks, and the little guys lost their jobs, and many people lost their houses, and they couldn't pay their mortgages. But people are alert to that now. So I think with a true audit, the main place where we would find out what's happening and what they really protect is the information of international transactions. So it's a much bigger thing than just the Federal Reserve manipulating our money. We were responsible for propping up a lot of governments, and I'm convinced personally that at the same time we get involved in countries, and when we freeze assets and bail out certain countries, that we're very much involved in foreign policy. So we literally can create money out of thin air, send it to them, and prop up a government. Then they have to do our bidding, or they, because we're powerful, we might come down hard on them economically. So, but the audit is the key to it. And like you mentioned, it doesn't answer all the questions, but it's one step further because we've used the issue of transparency and that people have a right to know about how this secretive monopoly works. This has been very beneficial and very helpful. So my guess is it's going to be very difficult to get enough votes in the Congress. The people are waking up. Congress is very slow, and the special interests pay their way. So they're not in the next year or two going to vote and really rein in the Fed. I think the more the people know about it, the more likely it is that when the major crisis comes, they're going to understand it better, and they're going to realize that we have to have monetary reform, which means giving up on this idea that you can print money out of thin air, call it wealth, and think people are going to get rich over this and have a healthy economy.
Now, one of the big steps after ending the Fed that you talk about is to establish a true gold standard. Can you explain what you think an ideal gold standard is and how it differs from what you call a phony gold standard that we've seen in the past?
Yes, it makes a difference. Some of the phoniness that are presented now, today, and proposed, and what we've had in the past, they worked for a while. The Bretton Woods was a phony gold standard. In 1944, Americans weren't even allowed to own gold, and the dollar was backed by gold, but only by foreigners and foreign central banks that would turn in $35. They got an ounce of gold. Well, that failed because we didn't have enough gold, and we kept printing a lot of money. So the phony stuff, comes to an end. And even when we had, before 1971, we would have fractional reserves. Instead of 100% backing of your currency, they might back it by 40%, then down to 25%, and then eventually nothing. The temptation is always too great by authorities who like to spend money, and they find it difficult to just keep raising taxes. People rebel against that. So the Federal Reserve is actually in the taxing business. So they print the money, dilutes the value of the money in your pocket, and so therefore they're taking value from you without sending the IRS to take the money. And this is the way they have always financed wars. And this is the thing that when people realize it, that they'll know that that has to end. Today, some of the proposals are that there's a group, the supply-siders, propose a gold price rule. Now, the gold price is important. We haven't had a gold standard, but when we went on, when the Bretton Woods broke down in '71, gold was $35 an ounce. So it's up now to $1,350. So it does reflect it. The market is telling us what's in, but that's not a gold standard. A true gold standard is where if they issue a certificate and say this certificate is worth 1 ounce of gold or 1 ounce of silver, an individual should always be able to go to the bank and say, well, I don't know if you guys are being honest with us. I want my silver. I want silver dollars for these Federal Reserve notes. And so the gold or silver coin standard is what is necessary so that the checking up on it would be by the people. And the gold rule people are just saying, well, when we see the price of gold goes up, we need to, change our monetary policy. That's sort of after the fact and really doesn't reflect a true gold standard.
Before we let you go, can you discuss a little bit about the importance of, also besides gold, just free market currencies and making those legal?
Yes, and this is has been one of my proposals, and that is competing currencies. And so at the national level, you'd have to do a few things. You'd have to repeal the legal tender laws because now the legal tender says that the Federal Reserve note, which is a debt instrument, is to be used for all debts, public and private, which isn't true. They already restrict us. You can't walk into the IRS and pay your taxes, that sort of thing. So, but there are on the books. We can't take a silver ounce and call it $1, and you and I do a transaction and call it $1. Then they come down hard on us. So you want to get rid of all the legal tender laws, and you have to get rid of taxes on gold because if your paper money goes up in purchasing power, you don't pay tax on that. But if the purchasing power of an ounce of gold goes from $1,000 to $1,200, and you want to spend it to buy something, they say, well, you have to pay, this is a commodity exchange, so you have to pay taxes on that $1,200 profit you made. So you have to get rid of capital gains taxes by the federal government, and actually the states should get rid of all their sales taxes, and you could have a national law under the monetary provisions in the Constitution that say that you can't put a sales tax on money. So then you allow the people to decide, as things get rocky, use something else. I think Bitcoin sort of introduced this notion. I'm not a Bitcoin supporter, but I argued the case it should be legal as long as there's no fraud. But there are some who are trying to do a currency like a Bitcoin, but also have a gold backing to it. And that should be legal, but the taxes are an issue as well as the legal tender laws.
Well, Ron Paul, thank you so much for joining us today. Before we let you go, did you want to share with the viewers any last thoughts you had and where they can find you online?
Okay, the best thing to find me, I like to have people go to RonPaulLibertyReport.com. I do a daily program on there. At Central Time, I come on and do a live program on the most current issue that goes on that particular day. We do a lot on foreign policy and a lot on monetary policy. And all I know is that the group of people that you talk to, Elijah, and others still go to the college campuses, and that's where all my hope and encouragement is because it's going to take a while. It's going to take changes, and I'm a believer that ideas do have consequences, even though it seems to be very frustrating. But so I'm delighted when I can talk to people that know what you're doing and the efforts that you made, because that tells me that the ideas are having a consequence, and that to me means that we can change this without self-destruction. And there are days when I think we're on the course of self-destruction. When I look at all the foreign involvements that we have in this idea that you can have a $20 trillion national debt, and the answer is print more money. So I'm delighted that there is a generation coming along that I think understand this a lot better than my generation in the 1950s did. I'll tell you what, I think we've made great progress.
Well, definitely. And thank you once again, Dr. Paul, for joining us today.
Okay, Elijah, thank you.
This video was brought to you in part by ReluctantPreppers.com. Click here to watch Reluctant Prepper's latest interview with Jason Burak. If a financial collapse is a credible risk, how will it impact your personal wealth and well-being? Will we see bank failures, currency failures, debt explosion, deflation or hyperinflation, pension plan insolvency, Social Security default, and seizure of accounts? How about the seizure of gold and silver, nationalization of mines, government takeover of industry and stock? Regardless of the global forces in play and the powers that be, when it all comes down, where will it hit the ordinary person? Co-founder of WallStreetForMainStreet.com, Jason Burak returns to Reluctant Preppers for a rapid-fire rundown of how this all unwinds and what you need to do to protect what is yours. This interview is not to be missed.